Hello students, I am Dr. Panduranga Nayak, Principal SVS College Bantwal. Dear students, in the last class, we were studying on the topic deduction and ATC, that is deductible from the gross total income. Now we'll go ahead with some more problems on the computation of deduction and ATC. Let me explain the problem. You must also come along with me. From the following particulars, calculate deductions under section 80C. LIC of rupees 12,000 on own life policy 1 lakh. See here, policy taken on the life, own life, spouse and children, and the premium paid on those policies. These are qualified for deduction under 80C. So, premium paid on the policies taken on the life of self, spouse means for husband it is wife, and for wife it is husband. And then children. Children here means maybe married or unmarried, major or minor, okay, like that. Employed or unemployed. So many things are there. Okay. If the policy is taken after 1/4/2012, yes, the limit is, overall limit is 10% of sum assured or policy amount. If it is before 1/4/2012, then the limit is, limit of qualifying amount is 20%. So here, if nothing is mentioned, we have to assume that it is after 1/4/2012. Therefore, 10% of 1 lakh is 10,000. 10,000 is qualified, not 12,000 rupees. But if it is supposing 8,000, entire 8,000 is qualified. It is the premium paid or 10% of policy amount, whichever is less. Okay, LIC premium on mother's life. So this is not allowed because only insurance premium paid on the life of self, spouse and children is allowed. So this is not allowed. This is not qualified. Rupees 15,000 subscribed to home loan account of National Housing Bank. This is allowed. Even interest accrued thereon is allowed. That's qualified. Fixed deposit for 5 years in State Bank of India tax saving scheme, I mean. Okay, that's also allowed. Contribution to mutual fund of Unit Trust of India, that's also qualified. Tuition fees of 3 children is given 20,000 each. Under ATC, only tuition fee of 2 children is allowed. So, tuition fees of 2 children is 20,000 into 2. So, 40,000 rupees are qualified for deduction under ATC as far as tuition fees are concerned. Next, NSC 8th issue purchased rupees 75,000. So entire amount is qualified. Interest accrued on NSC 10,000. This is qualified. Interest received on NSC matured is not qualified because only if you reinvest, then that is qualified, otherwise not. If it is 5 years NSC, 5th year interest is not qualified. If it is 10 years NSC, 10th year interest is not qualified. Earlier it was 6 years NSC, 6th year interest was not qualified. Whereas for the earlier 5 years, interest accrued used to be qualified. Come to medical insurance premium of 15,000. This is not qualified under ATC, but it is deductible under 80D. A separate deduction is there under section 80 only, but not under 80C. The repayment of housing loan taken for construction of house. Only if the loan is taken for construction of house, then it is allowed. Construction or purchase of the house. If it is extension, renovation, repair, etc., then that is not allowed. And again, in the installment, only principal amount is allowed, not the interest. Interest is of course to be considered, but not under ATC, but under the computation of income from house property. Okay, I have explained everything. See the solution here. LIC premium on own life policy maximum 10%, so 10,000, not 12,000. Actual amount paid was 12,000. LIC premium on mother's life policy is not qualified. Then subscription to National Housing Bank and interest accrued thereon, both are qualified. Fixed deposit for 5 years in State Bank of India under tax saving scheme, entire amount is allowed. Contribution to mutual fund of Unit Trust of India allowed. Tuition fee of only 2 children is allowed, that is 20,000 into 2. Then NSC 8th issue, this is allowed. But interest accrued on that, that's also allowed. But interest received on maturity of the NSC, that's not allowed because that's not going to be reinvested. I already explained that. The repayment of housing loan taken for construction of the house, only principal amount is allowed, but interest is not qualified under this section, but it is the benefit is allowed under income from house property. Under that section, the benefit is given. All right. Now, if you total up the qualified amounts of different items, you will get 2,64,400. This is the total qualified amount. But entire amount is not qualified here because there is a limit. Maximum limit is maximum deduction available under ATC is 1,50,000. So qualified amount or 1,50,000, whichever is less. Supposing this amount is 1,40,000, 1,40,000 or 1,50,000, whichever is less. In that case, it would have been 1,40,000. Interest received on NSC matured is not qualified as it is not reinvested. Medical insurance premium paid is not qualified under section 80C. However, it is deductible under section 80D. Alright, we'll move on to the next problem. Okay, here the SSC is Suresh. Assessment year is 2021. He is a senior citizen. Payment of life insurance premium on own life policy, that's allowed. You already come to know that life insurance premium paid on the life of self, spouse and children is allowed. So here it is own life, therefore that's allowed. But it is taken in 2011, therefore 20% of policy amount is qualified. So 20% of 2 lakh will be 40,000, but here premium paid is much less than that. So 18,000 is qualified. 18,000 or 40,000, whichever is less. Supposing this amount is 45,000, then 45,000 or 40,000, whichever is less. Okay, payment of life insurance premium on the life of wife, this is allowed, qualified. And paid out of agriculture income, does not matter whether it is from exempt income or taxable income. And date of purchase is not given, and sum assured is also not given, so entire 5,000 is allowed. Payment of life insurance premium paid on the life of married daughter. I told you whether the daughter is married or unmarried, major or minor, employed or unemployed, doesn't matter. Therefore, as long as the insurance premium is paid. Therefore, you have to take now the ceiling. So ceiling is, here policy is taken on 1/7/2018. That means 10% of 1,50,000. So that comes to 15,000. Whereas paid is 16,000. So only 15,000 is allowed, not 16,000. Yes, 16,000 or 15,000, whichever is less. Premium paid rupees 12,000 on the life policy of the major son. So sum assured is 1,40,000. Policy is taken on 1/6/2017, that is after 1/4/2012. Therefore 10% of 1,40,000 is 14,000. So 14,000 or premium paid 12,000, whichever is less. So 12,000 is allowed. Own contribution to unrecognized provident fund, this is not qualified. Contribution to public provident fund is very much allowed, qualified. Accrued interest on NSC, it is qualified, but here 5th year's interest is not qualified because that is the interest received on the maturity. So that is not going to be reinvested. Therefore, only the interest which is reinvested, that is qualified for deduction. So 4,000 minus 1,500, that means 2,500 is qualified. Deposit in Sukanya Samriddhi account, the entire amount is qualified for deduction under 80. Let us see the total qualified amount and whether the entire amount is allowed or not. So I have already listed out all these things. See, life insurance premium paid on own life policy, entire 18,000 is qualified because ceiling is 40,000. So 18,000 is much less than that. Here on the life of wife, so entire amount is qualified, though it is paid out of agriculture income, that doesn't matter. Here premium paid is 16,000, whereas the ceiling or limit is 10% of 1,50,000. So 16,000 or 15,000, whichever is less, so 15,000 is qualified. Here on the life of major son, so only 12,000 is paid, whereas the ceiling is or limit is 10% of 1,40,000, that comes to 14,000. 12,000 or 14,000, whichever is less. Own contribution to unrecognized provident fund, so this is not qualified. Contribution to public provident fund, this is allowed. Accrued interest on NSC, okay, excluding 5th year's interest, that's allowed. Deposit in Sukanya Samriddhi account, 20,000 is allowed. So total amount is 1,02,500. Here it is much less than the maximum limit, that is 1,50,000. So entire 1,02,500 amount is qualified or deductible under 80C. I have written the note as the total qualified amount, that is 1,02,500, is less than maximum deduction under section 80C, that is 1,50,000. Therefore, the deduction allowed is rupees 1,02,500. Further, in the case of insurance policies, that is life insurance policies, the qualified amount is actual premium paid or 20% of sum assured if the policy is taken before 1/4/2012. If it is after that, it is 10% of policy amount, whichever is less. So I have completed both the problems. We'll take up some more deductions in the subsequent presentations. Thank you very much.